Growing Your Business, a series of podcasts brought to you by the LearningWorks team at Highlands Islands Enterprise. In this podcast, we'll be focusing on the topic of finance. Experts from across the Highlands and Islands will be taking a closer look at the financial indicators of a business and the methods of securing additional finance to allow your business to develop. Even if you don't come from a financial background, it's important that you understand the basics of finance and the main indicators which will provide you with an informed view on the performance of your business. Neil Armour, a restructuring director from KPMG, explains more.
Knowledge is power and knowledge is control, as we all know. Clearly you have to know your business if you're going to keep control of your business rather than begin to lose control to creditors, to the banks and to others. So in terms of financial knowledge of your business, financial statements, those are critical. Frida talked about monthly management accounts, absolutely first class. Every business should have them. There is really no excuse in the modern world for not having monthly management accounts. There are numerous financial packages available relatively inexpensively. There's a huge accounting profession out there. Well, I'm here to sell my own profession's wares, of course, but there is really no excuse these days. But look beyond just having management accounts. I have a set of management accounts. Great. What does that mean exactly? It obviously means a profit and loss account, and it means a reconciled balance sheet. But we need to look a bit beyond that, I think. Almost invariably, in businesses that we see that we work with, they're a little overstretched, that need a help to get over the peak. The financial statements they're using are often too historically focused. They're focused on profit and loss gone past. In this environment, that's not enough. A good management information pack should include the past, obviously. You need to know where the business has been going and is, but it also should look to the future, should look to market, should look to the sector, should look to news flow. In the current day and age, it's easy to go on the internet, set up news email alerts for notices about any particular business. If you and your business have a particular reliance on one customer or on one supplier or on a particular sector, set up a newsmail alert. It's not expensive. In fact, it doesn't cost anything at all. It's all part of relatively simple information gathering.
One of the key financial indicators everyone should keep a constant watch on is cash flow. Where does money come into the business and where does it leave? As Neil Armour explains, cash is king.
Clearly, of course, one of the fundamental things in business is cash flow. Your monthly management information pack has to include cash details, cash analysis, even just in simple terms, where the money came from, actual cash, and where the money went in the last month. Every business should have a rolling cash flow forecast. Frida talked about how her business works on a variable overdraft limit now. Many businesses do. It's a perfectly sensible practice for both customer and bank, but it does mean that you need to pay more attention. Your business is expected to go on a borrowing curve. You need to know where you are on that curve, that you're on track with that curve. If your borrowing curve slips a little, you'll be off kilter with the curve, and you may find yourself very easily breaching an overdraft limit, or not being able to breach it, not being able to honour payments that you hadn't expected. And in the past, in normal circumstances, it just wouldn't have been an issue because you would have been well below your normal standard fixed facility. The golden rule at the moment is cash is king. You'll hear it every day, you'll see it every day. It is absolutely true. It's one of the key truisms in business. We've seen many businesses we've helped over the years who have made losses, sometimes very substantial losses. You'll see businesses who are balance sheet insolvent. These businesses can be rescued, often are rescued. Businesses can survive years of loss making, they can survive periods of being balance sheet insolvent. What businesses can't survive generally is running out of cash. It's pretty difficult to come back from not being able to pay the wages at the end of the month and from being put on stop by suppliers. Cash is the lifeblood of businesses. Cash is king. If you only remember one thing, if you only try to follow one mantra in business at the moment, cash is king. That means maximising cash in, and it means minimising cash out.
Once you have an understanding of financial basics, it will become even more clear when an injection of additional finance is called for. There are three main sources of additional finances available to a business: the bank, grant-based finance, and venture capital. But how do you decide which is right for your business? Ian Scott, chairman of Highland Venture Capital, believes it all depends on what the additional capital is earmarked for.
I think each business needs to look at what its needs for the capital are, and that will lead it down the path to where its best bet is. If it's evolving new ways of working or extending employment, they may find grants are a better way to go. If it has a lot of security available, then debt finance against that security might be advantageous because it won't dilute the capital holding in the company. Or it may be that you want to bring in not only money but experience, and that may be raising capital would be the best means of bringing both of those in.